Welcome to the Nichols Tax Update Podcast for May 17th, 2021. This is issue number 2120. It doesn't seem possible that we've done 20 of these already in 2021, but we have. This program is produced to provide current information about developments in United States tax law, cases, rulings, IRS pronouncement, expert comments on hot topics. You are receiving it as a member benefit from the South Carolina Association of CPAs, who also provided that clever little ding ding on the front end of this. My commentary is necessarily brief, and you should consult appropriate authority before taking a position on any item discussed in the program. And I do acknowledge the value in preparation and presentation of this program of my subscription to Tax Notes Today, a publication by tax analysts, in my opinion, the preeminent source of information for a true tax professional in this modern world. What's in this edition? 5 items this week. A nice variety, certainly, but not so much time, perhaps. The IRS clarifies income subject to the net investment income tax. I think that's helpful. And then an admonition from a tax court judge that an expert should not try to also be an advocate. Just state your opinion and the facts as you understand them, and wait for cross-examination. Tax provisions in the American Rescue Plan, I thought a second look at those might be helpful since we're in the last throes of filing the 2020 tax returns. LLC members are going to be audited for self-employment tax. We've known that for a decade, and the IRS is no closer to a perfect solution than they were in the beginning. They have what they believe is a perfect case, but it's very flawed. I have what I believe is a perfect case on my side of the argument, but I acknowledge that it's also flawed. We'll talk about the cases, the positions, and the difference. That might be the most important thing we talk about this week. Which of your LLC members' income is subject to self-employment tax? And finally, which tax credits are safe from creditors in bankruptcy? And that's important because we're going to be dealing with insolvency and bankruptcy more than we have in over 20 years as a result of the pandemic and its adverse effects on the finances of our small business clients, no matter how long they've been around. So, C Corporation shareholder employees' dividends are subject to the net investment income tax. The IRS will gruesomely pursue these business people. A shareholder employee's dividend income received from his C Corporation is not shielded from the Section 1411 net investment income tax. Were it an S Corporation, a passive entity, it would not be subject to the net investment income tax. In this case, because the shareholder employee in this example substantially participates in the corporation's business and would qualify for the exception. So there is no exception for income from a C Corporation to the Section 1411 net investment income tax. But if the shareholder who receives a distribution from an S Corporation or the partner who receives a distribution from a partnership materially participates in the business of the partnership or the S Corporation and is responsible for earning that income, you have an exception to the net investment income tax. Next, an expert witness should not be an advocate. In remarks reported in Tax Notes Today on May 11th, veteran tax court judge Albert Lauber cautioned CPAs who would be testifying experts not to get too interested in promoting their client's cause, but rather to stick to the facts, the tax law, the complexities that they're called on to explain as an expert, and that's it. He was responding to a question on what factors can affect the persuasiveness of expert testimony. Judge Lauber said, if an expert's arguments are too one-sided, I can just discount their testimony. He went on to say, what I find persuasive is how even-handedly the expert makes assumptions and estimates, of course, in the calculation and the presentation of a tax liability or a penalty or some other tax-related obligation. Further, the judge cautions, experts should remember that they're required to show their work. The judge wants to know how you got there. On what basis? How did you make that calculation? What were your assumptions? That's as important as your conclusion. And that, dear friends, is where cross-examination begins. Let me see your work. Tax provisions in the American Rescue Plan. Information release 2021-106 on May 11th, in case you missed it. For 2020 only, the first $10,200 of unemployment compensation is tax-free, and the IRS will refigure a return that was already filed and did not exclude that amount, including any affected phase-ins or phase-outs. And also, by the way, the repayment of the excess advance premium tax credit is not required for 2020, and the IRS will reimburse the tax. They'll recalculate that and reimburse any taxpayer who paid too much. In later years, the child and dependent care credit is increased for 2021 only from 35% to 50%, and you're permitted to claim qualifying expenses of up to $8,000 for one qualifying child and $16,000 for two. The adjusted gross income level at which the credit percentage is reduced increased from $15,000 to $125,000, phasing out altogether, not phasing out altogether until you're over $400,000 in adjusted gross income. The maximum contribution to dependent care flexible spending arrangements is increased to $10,500, and the earned income tax credit is expanded in ways too complicated for only one slide for most taxpayers who meet expanded income tests. You'll want to check that out if you have taxpayers who are qualifying for the earned income tax credit and their income is on the high end of the qualification scale. The IRS is going to pursue LLC members for the self-employment tax, but you can win. I tried to take that cartoon from the first slide and reverse it, but the poor IRS guy's briefcase is backwards. But they frequently have their briefcase backwards, so I'll just leave it that way. These are remarks by Clifford Warren, the IRS Office of Associate Chief Counsel, Pass-Throughs and Special Industries, a lawyer, IRS lawyer, telling us that the IRS relies heavily on Rinkmeyer for authority that all LLC income is subject to SE tax. The problem is Rinkmeyer Partners just said that no income, none of the income of their law firm, where they were the only lawyers, was subject to self-employment tax. None of it. That's absurd. They provided all the income. It was their personal services that produced the income. So for the IRS, the Rinkmeyer decision was like shooting fish in a barrel. It does not work. Check my next slide here. Here are the factors. In spite of IRS chief counsel advisories that try to rebut me point by point, they've not been able to win in court. In fact, they lost. I won a decision. My opinion was the winning decision in Hardy, which we're going to talk about before we're done here. Is capital a material income producing factor? Is labor a material income producing factor? Is technology a material income producing factor? Does the member under examination materially participate? The compensation that should be required to the member should be related to the value of the member's participation. That's well established in income tax law with S corporations and C corporations, but the IRS tries to wiggle out of that by saying, well, the principles don't apply. The principles do apply, and the tax court said so. If the answer to the fourth item in that list is no, just stop. All the income is probably subject to self-employment tax. We've been applying the same test to S corporation compensation. But if the answer to all four listed items is yes, then proceed to the next line on a relative basis. How important is each of the first three when compared to the value of the member's participation who is under examination? So pick a number for guaranteed payment. The value of the LLC member's participation is compensated with a guaranteed payment. When you read the practice unit, one of the cases cited is Hardy, a tax court decision. I wrote the winning opinion in Hardy, and the tax court found that Dr. Hardy was not subject to self-employment tax on all of his income from a limited liability company that ran a surgery center. Hardy, Hardy. It's worth a read, and it's easy to find. Next, what tax refunds are safe from creditors in bankruptcy? The citation here is with regard to Moreno. Taxpayer filed for bankruptcy in the middle of the pandemic and sought to exclude the earned income tax credit, the additional child tax credit, and the recovery rebate credit from funds paid to creditors because the return was filed after the bankruptcy petition was filed. That's not a winning argument. It doesn't matter when you filed the return, before or after. What matters is whether or not those credits can be reached for the benefit of your creditors, right? State law is important when you're classifying federal benefits, which these credits are. They're social benefits cast in the form of tax credits. And here the taxpayers in Washington State. In Washington State, the law exempts post-petition tax refunds stemming from the earned income and child tax credits as federally administered needs-based programs. They are specifically exempt. However, there is no such exemption for the recovery rebate credit. It was earned as the taxpayer's income was earned, and it is not a needs-based program. Pretty simple to understand once you cut it up into its proper pieces. Thank you for joining me this week. It's always fun. I enjoy these times together and look forward to next week. Meanwhile, stay safe. We need all of you.